JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 4th of February 2021. Yep, so welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so guys, good morning to everyone. Good morning, Klaus. I can see, yep, thank you very much. Good morning to you too. So I hope your day is going well. I mean, I hope everybody's day is going well today. I know it's just the start of the day, but well, let's kind of think that it's going to be a good day, and certainly it will be. Now, before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, guys, jumping into the charts. Now, quickly, I want to pick up here on Nikkei. I talked about this index, and basically, it kind of worked out and didn't, I would say, because basically what I was saying previously, that in a way, if it climbs back above the 28,527 territory, there is a good chance we could see this one pushing higher. However, as you can see, also that I've mentioned before, was that if we get a push above this 28,980 zone, that will be a little bit of a better indication of higher that the index could go higher. You can see that yes, we pushed above this 28,527 zone. However, this upside line here, drawn from the low of the 30th of October, did provide decent kind of resistance. Now, today we saw the index drifting back down. First of all, I can get rid of this little short-term upside line. I mean, no longer needed, because I'm going to focus mainly right now on this one. But how I'm going to look at this right now is that, in a way, yes, it found resistance near this upside line, kind of it then drifted back down. However, it still remains above the 21-day EMA. So basically, there is a good chance for this one to kind of reverse and maybe push higher if the 21-day EMA kind of continues to provide decent support. So if the 21-day EMA gets broken again and we see the price falling below it again, still, don't get me wrong, I mean, for me to get excited with, let's say, with lower areas, I still need to see a drop below this little hurdle right here. Let me just quickly put this one on the chart. There we go. And that level is around the 27,600 zone. So basically, a nice good drop below this would confirm a forthcoming lower low, and further declines could be possible. But at the moment, because we are at a very tricky spot here, I'm leaning a little bit more towards the upside still, especially if the price continues to trade above the 21-day EMA. So kind of keep that in mind. And like I said, the downside for me could come here on the drop below the 27,600 zone. Now, jumping into Shanghai Composite, here the index, you can see that it dropped to the downside as well today. I mean, still closed in the red, but remains below the 21-day EMA. So in this situation, we have a 21-day EMA, which is acting as a very nice area of resistance. You can see kind of, well, you can see the picture here. I mean, you can see by the previous day, days here that would happen. So on the other hand, we are still trading above this upside line. So this upside line is drawn from the low of the 19th of March. So in a way, kind of the trend is still to the upside, and these little kind of little hiccups to the downside could be considered as temporary corrections. So again, we need that break here of this upside line in order to kind of, let's say, get a little bit more excited with the downside. Now, previously I talked about this little area right here between the 3,459 and the 3,466 territories, roughly around here. However, I mean, depending on how this is going to shape up here, I mean, yes, it might remain an interesting area, the support area to keep an eye on, but depending, like I said, if it starts dropping earlier here, if it, let's say, starts dropping below this upside line straight away, and then just for that extra confirmation, you could keep an eye on the low of January, if I'm not mistaken. Is this? Let me just double check very quickly. So that's going to be, yes, that's the lowest point of January, near the 3,440, well, 46, let's roughly put it there. So 3,446 could be that area to watch, just for that extra confirmation in order to consider lower areas, because at the same time here, a drop below this will put the price below the January's low, will confirm a forthcoming lower low, and potentially more sellers could join in. But at the moment, guys, the downside is slightly off the table. I'm leaning a little bit more towards the upside still, because this upside line remains intact. Jumping into German DAX now here, similar kind of, well, I wouldn't say maybe similar, but also a little bit more on the positive side, because again, look at this move here. We've managed to push higher yesterday, and most important, although we had a brief drop back below this downside line, the index remained above that downside line here, drawn from the high of the 8th of January. Now, how we could look at this with the German index here. So for now, I'm gonna consider this downside line as a nice trampoline here, a nice support zone, because if it continues to provide that, hold up, then yes, a nice reversal back up here could be possible. And now you could keep an eye, of course, on this level here, the 13,952 mark, or if you want to be even more on the safe side, then you could kind of wait for a push above this 13,988 zone, which is marked by the high of yesterday. This way, the index will confirm a forthcoming higher high, and yep, more buyers could join in here. So again, a lot to consider. For now, the main thing to consider is to see if this downside line will continue to act as a good area of support. If it does, then yep, a nice reversal back to the upside here could be possible, where we will start aiming for that psychological 14,000 zone, or even above that, or even maybe we'll aim for that highest point of January again. But again, in terms of the downside, now previously I talked about this level here, this 13,795 zone. I will keep that in. Actually, let me just adjust this very quickly. So I believe that this level needs to go now, to be honest, because it kind of got violated. So in a way, it seems that it's kind of ignoring it. So yeah, let me just readjust this and. Yeah. Okay. So basically, what I'm going to do here for the downside is I'm going to remove certain levels here, no longer valid. But this one right here, the low of February 2nd, could be an interesting one to watch. This one is around the 13,694 mark, and in a way, if we get a drop below this, we would already automatically have a drop below the 21-day EMA, and yep, in a way, maybe we could go for a bit of a larger correction to the downside. The reason why I'm saying correction, because again, we're also trading above this upside support line drawn from the low of the 19th of March. So keep your eyes on that one. Now, jumping quickly into the economic calendar for today, guys, something to keep in mind. Keep your eyes on the UK data. Today's we do have the construction PMIs coming out for January. For the current expectation, of course, is for a decline from the previous previous, but let's see how that plays out. The previous one was at 54.6. Now the forecast is at 52.9. Now, even if we beat that forecast, if we beat that forecast but still come out on the lower side than the previous, I mean, the pound could still remain kind of under pressure a little bit. So yeah, be careful with that one. And also, we do have, of course, apart from the construction PMIs, we do have the BOE's interest rate decision. I mean, again, they are considering negative rates, but they're trying to kind of push away as far as possible from that idea. But yeah, let's see how all this is going to play out. Of course, no surprises are expected that during this meeting. The current interest rate sits at plus 0.10, so the expectation is for the same number. And another thing that you could keep an eye on is the BOE MPC vote change number. So I mean, currently the number sits at 9, but and the forecast is for 9. But if something comes out, let's say a bit on the lower side, if let's say below 9, if it comes out below 9, then well, I mean, there could be a bit of a shift, and we could see maybe the pound reacting a little bit more. So yep, keep your eyes on that, guys. Again, very interesting information coming out today. And of course, from the US, we have the initial jobless claims, which are expected to have declined, so hopefully that's the case. But again, let's not get our hopes up yet. Let's see how the number actually comes out, and then we'll take it from there. That's in terms of the economic data. Of course, the whole kind of coronavirus issue still remains. I mean, obviously, but keep an eye on the whole kind of process of the vaccination. And if we get positive news, then yep, this could play out nicely on the equity world here, and we could see equities pushing further north. Now, jumping into DXY very quickly. So the dollar index pushing to the upside slowly, of course, but still, you can see that we are again for the third time we're above this 91.24 zone. Of course, this kind of gives a bit of more hope that the index could travel further north. For now, that's what I'm going to be aiming for. And although my arrow is here, kind of going all the way here, still my main target is the 91.75 zone. And yeah, then I'm gonna kind of see what he wants to do after, because here we have this 100-day EMA as well. I mean, good obstacle. This is also the lowest point of September. So yeah, let's see how this is going to play out near this area. For now, yes, I'm targeting the upside. If the price remains above the 91.24 zone, if it falls back down, I'm taking a neutral stand. But for me to consider the downside, I would like to see a drop below the 90.60 territory right here. At the same time, it would bring the price back below this downside line and below the 21-day EMA. Jumping into gold. So gold, now this is where it's interesting. So from the beginning of this week, from actually last week as well, I've mentioned this one and said that my next target is going to be that 1819 level, and well, boom, we managed to reach that level finally, and yep, everything worked out nicely here. So on Monday I said that if this downside line provides good resistance, if it holds, then my next target is the 1819 level. So we managed to reach that, and currently we are trading slightly above it, although we did pierce it through here. But yeah, let's see how this is going to play out. I'm not saying that this could go further south. I mean, it could, but yeah, for that now at this point, given that my target has been reached, and now the way I'm going to play this one out is I would like to see the daily candle staying below this 1819 zone, below this 200-day EMA as well, and then kind of I will get a little bit more excited with the downside, because at this point we could get these kind of false breakouts as we had here, for example, on the 18th of January, on the 11th of January as well. So yeah, I mean, we rather wait for that for that kind of daily candle staying below this area, and then kind of get a little bit more excited with further decline. So for now, yes, keep your eyes on that one, and let's see how this is going to play out. But again, this idea worked out perfectly. Now the next idea for me is, yep, like I said, to keep an eye on the daily candle, and if it stays below this 18-19 zone, then yes, I'm aiming for the downside. In terms of the upside on this one, now this is where we're going to be, where it's going to be a little bit tricky. Of course, preferably for me to consider the upside, I would need to see a break of this downside line and then a push above the 1875 territory. Now, I do understand that we could be missing out on a lot of territory here, but let's say the way you could play it out is, for example, if you get we get a push above the current, let's say, high of today, which is roughly around the 1835 zone, and then yes, if it pushes higher, then we could go for some higher levels here. Of course, don't get me wrong, we will have a very tight stop loss just in case this kind of, let's say, reverses sharply back to the downside. Again, seen that happening several times, so just to be a little bit more on the safe side. So yeah, if we push above this 1835 territory, we might see maybe a corrective move here back to the upside, and then we'll take it from there. But again, I cannot stress this enough. I mean, still everywhere a stop loss is required. So, and here, for example, if you're, let's say, you've entered a position here, I mean, if you are once in profit, don't be kind of, even if it's a little bit, just put that stop loss just in case, because again, it's a very tricky zone here for the upside. So so yeah, just to be on the safe side. If it stops you out, that's fine, and at least it stopped you out like on a break even, so but not in a kind of minus. So yeah, be very careful on that one, guys. I mean, that's an idea. You do, guys, you do whatever you're comfortable with. I mean, it might work out, it might not. So again, it's always it. Unfortunately, that's the game we're playing here on the with these. Now, jumping into WTI oil, here, wow, very nice move here on WTI oil. We pushed nicely above this 55.07 territory, and that level, let me just go back into history here a little bit. That level has been seen here as a, previously seen as a good area of support around these 18th, 19th, and 29th of November of 2019, and as you remember, yesterday I said that if that gets cleared, my next target is the 57.40 zone, marked by the low of the 15th of January. So now, again, don't get me wrong, we did have a decent up move already here, so in a way we could see maybe more upside to come, but I'm gonna keep an eye on this level here, this 57.40. In a way, it might provide a bit of resistance. If it doesn't, then my next target is the high of 20th of January here of last year, and that level is around the 59.61 zone. So yep, let's see how this is going to play out, and well, I mean, for now everything's looking quite positive here for WTI oil. In case this suddenly starts dropping lower and falls back below the 55.07 territory right here, I might go for a bit of a corrective move here lower, but only up until this this little short-term upside support line. Let me just put this one on the chart. It's a tentative one, don't get me wrong, but yep, might provide a bit of a hold up. Now, jumping into Ethereum very quickly. So Ethereum popping higher. Well, I mean, continues to rally here, and let me just jump into a monthly chart. So, well, much better performance. I mean, I think it's the best performing Ethereum from the kind of the top 5, the best performing crypto from the top 5. I mean, it managed to actually, and I'm talking about this month, of course, it managed to overcome its previous all-time high near the 50. 1595 zone. As you can see, it continues to rally here, and it's currently sitting near that 1674 territory. So again, because we're in uncharted territory, I will remain careful here. Yes, we've confirmed a new high, but can we stay above this area? Can we stay above this hurdle this month? Well, let's wait and see. But again, at the moment, everything's looking quite positive. It continues to rally, and but if the price suddenly starts dropping back below this 1595 territory, now that's where I'm gonna consider maybe a bit of a decline back here. Now jumping into AUDCHF. So guys, this one finally made a move. It broke this downside line drawn from the high of the 21st of January here, but again, I mean, yes, we are seeing a move higher, but we'll be very, very careful here, because it is kind of it is looking quite positive, but there are a bunch of obstacles to overcome here if you want to look at this one from a more of a kind of maybe a medium term perspective. I mean, yes, it could continue pushing further north. For now, this is what I'm going to be targeting, but there are a bunch of obstacles here. For example, like the highest point of January near the 0.6916. That's going to be my next target for now, to be honest, and then I'll take it from there, guys. If we get a pop above it, then yes, higher levels could be met. In terms of the downside, well, we would need to see a break of this upside line here, and then yep, a drop below this upside line, a drop below this downside line could open the door towards lower areas. Now jumping into USD JPY very quickly, quick update. Again, not far already from this 200-day EMA. Yesterday, this is what I've mentioned, that in a way, given that it failed to kind of go for that little correction that I was hoping it will go for initially. Instead of that, it kind of continued to rally, and then I kind of said that, well, it looks like that we might see this one just pushing all the way towards this 200-day EMA first, which is around the 105.35 zone, hitting that area, and then maybe stalling somewhere here, and then maybe going for a bit of a corrective move lower. So again, let's see how this is going to play out. For now, that's my kind of game plan, and yep, even what could happen here as well, that we could hit this 200-day EMA, we could even overshoot it, but if the daily candle still remains below this 200-day EMA, now that means that we had a very, very nice kind of false breakout here, and then this could just strengthen the idea of seeing maybe a corrective move back down here. GBP USD, so yeah, one of the main pairs to watch today, but so to be honest, it's already kind of making a good move. I've talked about this pair this week, and I was saying that if you want to aim for some lower areas, wait for that drop below the 1.3636 zone. We had a few false breakouts, but the daily candle failed to stay below it. This morning, we are already seeing a slide, so in a way the slide could continue. My next target now is this 1.3520 zone marked by the low of the 18th of January. In case this pair suddenly reverses sharply to the upside here, still, to be honest, I would prefer to wait for a push above the 1.3746 territory right here before kind of, let's say, getting a little bit more excited with the upside. Let me just get rid of this upside line, no longer needed. But yeah, that's the game plan, guys. I mean, for now, it's I'm leaning a little bit more towards the downside, but again, this downside could be a short-term occurrence because, well, we do have a bunch of upside lines here that we need to kind of keep an eye on. So basically, that's what I'm keeping an eye on right now. This one's drawn from the low of the 23rd of September. And in a way, there is plenty of room here still to see a bit of a nice corrective move lower. And maybe we'll get another rebound from this upside line. Who knows? For now, like I said, we'll keep it short and simple. Be very careful, like I said, today with the data from the UK. And if you want, you can kind of maybe wait for the data and then do some trades if you're comfortable with that. But yeah, keep in mind that there could be a possibility of maybe a few kind of irrational swings which kind of could take you out if you don't have proper stop loss in place. So yeah, be very careful on that one. Euro Aussie very quickly here. So Euro Aussie is drifting lower. Now this downside line needs to be extended a little bit here, and yep, we'll see that we have a nice downside line here drawn from the high of the 20th of October of last year, and yep, now everything's kind of drifting kind of back down. The pair is trading below the 21-day EMA. It's kind of pushing further south. And another thing is that we've managed to break this little short-term upside line here. So basically, a lot of things are leaning a little bit more towards the downside here on this pair. So, and for now, if it stays below this upside line, I will continue targeting the downside. My next level here will be this little area right here, marked by the lowest point of January, near the 1.5594 zone, and then I'll take it from there. And finally, EURUSD. So that psychological 120 level finally is getting kind of reached. So yep, as I said to you guys throughout, as I was talking throughout this whole week, I was saying that keep your eyes on this 100-day EMA. That's my next target. We had a nice drop below this 1.2059 zone, so now my next target is this 100-day EMA, which currently sits near the near this 1.19800 level here, this 100-day EMA. So that's my next target. If that gets cleared, of course, my the other area to consider is the 1.1925 zone here. But again, I want to see how it's going to perform near this 100-day EMA, because previously, as you can see here, in the beginning of November, it acted as a very nice area of support. So guys, that's it for this session. I can see there's a comment about silver. Yes, don't get me wrong. I mean, I do cover silver occasionally, and you know what? I'll pick it up on my trader's tea time today at 13:30 GMT. So yep, tune in then. I'll pick up on silver, and yeah, we'll take it from there. So I hope you found it useful, guys. I really appreciate your time. I do. Thank you very much for that. I mean, thank you. That means a lot. And thank you very much for the likes. I hope you have a fantastic day today. Stay safe, guys. Have your stop losses in place. And yeah, everything will be fine. Thank you very much. And bye-bye.